Microsoft beat earnings and their stock dropped. Meta also beat earnings and their stock soared. And at the same time, on Wednesday, January 28th, 2026, the S&P hit 7,000 for the first time ever. This might seem confusing, and confusion is what we're going to be going over in today's video. We're going to be taking a look at 3 of the Mag 7 companies that had earnings today: Tesla, Microsoft, as well as Meta. Why all 3 of these huge companies having earnings on the same day matters, and my investing results, because I invest into the S&P 500 as well as all of the Mag 7 stock. Now let's take a look at the earnings, starting with Microsoft. They posted strong earnings beat, but the stock sold off. So let's talk about what the market didn't like. The company is spending more money than expected to build and upgrade its infrastructure. They've been making big investments into AI servers and chips that are eating into their short-term profits. Costs are continuing to rise faster than revenue, and that is putting a squeeze on their profitability. And cloud sales are not growing as fast as before, which has investors worried. So what it boils down to is Microsoft is spending aggressively to win when it comes to AI long term. But the market is asking questions like, how fast does the spending turn into profit? As we just saw, this wasn't about weak earnings. The concern is around how efficiently turn these investments around and continue to be a strong, profitable company. Now, let's take a look at Meta, and they are up 6.6% in the after hours after they reported an earnings beat. When it comes to Meta, they are being rewarded for those strong ad sales, which are growing fast, rising profits, investing wisely without overspending, and a solid future earnings outlook. So when it comes to Meta, the investors are seeing a clear path to continued profitability. Meta's message: we're investing, but we're striving to protect our margins. And the stock market loves this type of balance. Now on to Tesla, up 2% in the after hours. And they did not beat when it came to revenue as well as free cash flow. When it comes to Tesla, is less about this particular quarter and more about the future of the company. When it comes to Tesla, they continue to spend big, staying focused on AI and automation, basically doubling down on tech, focusing on their robotaxi and Optimus robots, betting on the next generation of innovation. So investors have to be looking years ahead. And it's one that I often have to have patience with when it comes to my portfolio and be ready for potential bigger swings than my other Mag 7 investments. It's one that you have to be ready for higher risk and higher volatility. So when it comes to the 3 companies we've taken a look at, Tesla, Meta, and Microsoft, as well as so many others, as we will see as we continue to take a look at upcoming earnings, there is a common theme, and that is AI. Companies are spending heavily in order to make sure they're keeping up with their advancements when it comes to AI. The differences come in on how the market reacts, how confident they are that the investments that these companies are making right now are going to pay off in the future. So now let's take a look at my personal performance. First, we'll take a look at my VOO investment, which is the Vanguard S&P 500 ETF. This is a staple foundational investment in my portfolio. When it comes to retirement, I do FXAIX, but I'm also holding some VOO in my taxable account, an investment that I'll be holding through volatility as well as all-time highs without fear, because it's an investment that always recovers. You're not betting on one company, you're betting on the 500 top companies, though you will be heavily weighted into ones like we're looking at today that have those huge market caps. So as of today, my VOO up 47%, an investment that I add to my portfolio at any time without panic, just staying consistent and allowing it to steadily grow, pay a quarterly dividend, which I then reinvest to help me even more with building up my position. And now let's take a look at those Mag 7 names that had earnings today, which overall, over the long term, do outperform the index of the S&P. But it's going to take more experience on choosing a stock that you're ready to hold for the long term, more volatility. But when it comes to my portfolio, I am being rewarded for the patience I've had with positions like this. And before I get on to my individual results, I just want to highlight that the S&P 500 hitting 7,000 does not mean that the entire market is thriving. This milestone is being driven by a small group of mega cap tech companies. The current heavy AI optimism. And so these earnings carry a lot of weight because there are just a few companies that are heavily weighted into the S&P 500. So when an index is being led by such a few companies, there's less room for one to slip up. And we're going to have even more earnings coming up before the end of January, as well as that first week of February. NVIDIA is the only one a few weeks out. Okay, now let me just quickly share my results when it comes to Tesla, Microsoft, and Meta. Tesla, I'm up about 98%. I'm holding 17 shares in my portfolio. Meta, I'm up 29%. I have 3 shares right now, and I'm definitely ready for the potential upside of about 16%. According to analyst ratings, this one is on its way to over $800 a share. And when it comes to Microsoft, I currently have 4 shares in my portfolio. I am flat, no gains when it comes to my investment so far, especially after this 6% drop. But I'm going to continue to build and hold because this one, according to analyst ratings, has a potential of a 30% upside after a move up to over $600. So when it comes to my investing, I have a mix. ETFs, index funds, individual stocks. I'm investing with intention to capture the gains around the adoption of AI. These blue chip stocks that have solid balance sheets as well as low debt, the positive impact that my portfolio could see after potential future rate cuts. And it's sad to see these massive layoffs going on. But these improvements when it comes to technology is allowing these companies to do so much more with less. So I'll be continuing to keep an eye on stocks that I have in my portfolio to see how their spending on equipment and technology is leading to them having a competitive advantage. Are they staying on track for earnings growth? How are they handling obstacles like rising costs and other challenges that eat away at their profits? How they're impacted by the changes when it comes to those interest rates. But I always have my funds like VOO to rely on for a bit of simplicity and stability for my portfolio. So as we saw in today's update, earnings beat does not guarantee immediate stock gains. Efficiency matters. And times like right now, when so many big names are having earnings, we're going to see the impact reflected in the S&P 500. But I am a long-term investor, and this is how I strive to win when it comes to my portfolio, by staying invested and not overreacting. And now I want to hear from you. Make sure to leave me some comments. If you're not already, subscribe, hit that notification bell, and make sure to like this video. Are you holding Mag 7 companies in your portfolio, or do you stick to funds like VOO? Are there any Mag 7 companies that you're going to be focusing on building up in 2026? Let me know in the comments. And that's it for today. I hope you enjoyed this video.